Welcome back to Yahoo Finance. I'm Jen Rogers. We are just about 30 seconds away from the closing bell on Wall Street. We've been bouncing around here at session lows, coming off the best 2 weeks we've had since the 1930s, and looks like we're going to start this week off to the downside here. All three major indices are off, and the big It's so big, the oil gods wanted to stop me from talking about oil, but I can't do it. That is the closing bell on Wall Street. Sector-wise, let's talk about a little bit of what's been happening in equities. We have energy off some 3%. We've got utilities off 3.6% and real estate off 3.2%. Those are your three worst sector performers. But again, the story of today is what is happening in crude. I want to pull it up and I want to go right to Jared Blickery here to walk us through what's happening. Jared, we have the May contract. It expires tomorrow. Crude is a different animal. When you buy, S&P futures, you don't need to take delivery of anything. You take delivery of oil. And if you can't, then you are being forced into a very tough position, which is what we're seeing happen here. Can you just talk about sort of the unprecedented real fall and crash that we saw this afternoon to take this negative?
Yeah, it's just incredible to watch. I haven't seen anything like this since the May 6, 2010 flash crash. We're seeing a drop of $50 here on the day. It settled at negative $37, but we're talking about the May contract right here. When we go out to June, which is going to become the front month tomorrow, and most traders are already in that, it's trading at positive $21.26. So it's not as though we're going to see negative prices for the short-term future here. Now, what could happen is when contracts go off the board, like May was today, and we saw this squeeze into it, we could see something similar when June rolls over into July in 1 month. So that is a possibility. I mean, just take a look at the intraday price action here, if I can pull it up. And again, this is June off 15%, but WTI May off you can't even say negative 269% because that's not correct. It's a big amount, though. And it did spill over into stocks just a bit. We did see, as soon as it did go negative, we saw a drop in the Dow and the other major indices. And this is the intraday price action, but really not too much of a decline here, especially when you consider the magnitude of what's happened within an energy complex, really not translating that much into stock prices. I think the market's going to shrug it off somewhat, but it could spook people a little bit. A lot of retail traders were going into oil and USO, which is largest ETF for commodities, and they're getting burned right now. There's no other way to put it. So there is some hurt going on because of this trade, Jen.
Jared Blickery, let's bring in my co-host, Miles Udland. So Miles, Jared talking about the overall market maybe shrugging this off, or could this be something that spooks the market? You see this dislocation, and it's all based on demand, which we know has fallen off. We're producing way too much crude for the amount of demand that we have right now. And we don't know what the timeline for any of that demand coming back. And that demand story can be seen in other areas of the economy as well. So do you think, to Jared's point, that equities will continue to brush this off? Because we're down a ton today.
I mean, look, I think what the stock market is brushing off in the abstract is immense. I mean, the fact that we're 30% off of the lows we saw, and it's funny, 4 weeks to the day, 4 Mondays ago, we saw the lows in the S&P 500 on March 23rd. Now we're seeing maybe they're not the lows in oil, but one imagines probably the lows in the price of crude oil. And I think that so on the one hand, we've overcome so much already even to be here at this level. But at a certain point, you can't look at the most important input to global commerce, basically. I mean, oil basically tells you how much stuff is going and how far it's traveling around the globe. And for that commodity to see basically there's no bid for it. No one wants to have it. No one is using it. No one wants to store it. People want there to be no oil that they have to be involved with other than what they already have on hand. you can't really look at that and say, oh, this economic situation isn't as bad as we think. And I do think it goes back to a theme we discuss so often on this show. And, whatever, maybe we're just the Pollyannas, but you can't look at the stock market and not think that it's ignoring something much deeper happening in the economy. Maybe that divergence just goes on forever. Maybe that was the divergence that happened from 2011 all the way until 2017 or 2018. And we're just going to be wrong and frustrated all the way up. But certainly the split between what the real economy looks like and how financial assets have reacted continues to widen. And I think the relative strength of the market, particularly those tech names we've talked about so much, on a day when the price of oil, again, goes basically no bid, cannot be overstated.
Andy, sir, to Miles' point on the real economy, these are real companies. They have real jobs. You can't shut down your well because maybe you can't restart it. They also are levered. They have loans to the banking industry, financials off over what the market was today. Bank of America off some 4%, JP Morgan off 3.7%. Is this a story we need to pay attention to for the broader picture?
Yeah, and a lot of people own, Chevron and XOM. And interestingly, to Jared's point, these stocks are actually not at their lows. Their lows were on March 23rd. And Exxon has gone up from 31 to 41, down, about 8% today, I think. But, the numbers there are pretty amazing, 8% yield. It's got a $174 billion market cap. Compare that to what used to be its cohort of companies with market caps 10 times that almost, or 9 times that, which is pretty amazing. And same thing with Chevron. But today is just one of those days. It's unprecedented, historic, and bizarre, 3 words that I saw come across the screen. And when you go negative like this in such a weird way, it actually messes up all kinds of algorithms and trading formulas. Things just don't make sense. But, when the IEA comes out and says that demand for oil is going to be 29 million barrels less in the month of April than before, taking us back to a level from 1995, 25 years sort of wiped out. It sort of reminds me of the jobs numbers, wiping out those 22 million jobs in a similar way. It's a very much of an apples and oranges there, but it just sort of gives you an idea of the magnitude of the carnage that we're looking at, Jen.
Hey guys, it's Rick. I'm going to jump in. Do you remember how this slide in oil began just a few weeks back with this spat between Russia and Saudi Arabia? And nobody wanted to cut production, and they were deliberately trying to drive down the price. And then President Trump got involved, and just a few days ago, he said he made a deal with his pal, Mohammed bin Salman, and there was going to be a production quota, and this supposedly was going to push prices back up. That has just been completely blown out of the water. It makes me wonder, is Saudi Arabia happy with the price of oil right now? What does anybody think about that?
Oh, boy, Rick Newman, we're going to have to do a Friday special and dive into that. That is a big bit to chew off. I think this is as Miles says, this is a global commodity and a global story as well.
But remember, they're a diversified services economy now, Rick. MBS has this whole Uber thing going on, so it's fine.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.